A 71-year-old retired postal worker in Ohio opened her mailbox on a Tuesday morning and found an envelope from the Internal Revenue Service. She assumed it was a scam. She had heard the warnings on the news. The IRS does not call you. The IRS does not email you. She figured the same applied to letters. She put it in a drawer with the rest of the junk mail. 6 weeks later, her checking account was frozen, every penny. The mortgage payment bounced. The auto insurance payment failed. Her prescription refill was declined. She called her bank in a panic. The bank told her the IRS had issued a levy on her account. They were legally required to freeze the funds immediately. The letter she ignored was an LT-11, a final notice of intent to levy. It gave her 30 days to respond. She did not respond, and the IRS did exactly what the letter said they would do. That letter was the fifth in a series. She had ignored all of them. Each one gave her a chance to fix the problem. Each one had a deadline, and each deadline she missed took away one more option until she had none left. Today, I am going to walk you through 5 IRS letters that retirees receive, what each one means, what the deadline is, and exactly what to do the moment you open it. Because these letters are not scams. They are not junk mail. And the last one in the series can empty your bank account. This video is for educational purposes only and is not tax or financial advice. Consult a qualified tax professional before making any decisions about your specific situation. My name is Kevin Retires. Every week, I break down the tax rules, the financial traps, and the strategies that protect retirees from the things nobody else is explaining. If that sounds like something you need, hit the subscribe button right now and turn on notifications so you never miss a video. Letter number 1, CP14, First Notice of Balance Due. This is the most common IRS letter retirees receive. It arrives after you file your tax return if the IRS believes you owe money. It lists the amount due, including any penalties and interest that have already started accumulating. It gives you payment options and a deadline, usually 21 days. A CP14 is not an audit. It is not an accusation. It is a bill. The IRS processed your return and determined that the amount you paid or had withheld does not cover what you owe. For retirees, this most commonly happens because of insufficient estimated tax payments, under withholding on Social Security or pension income, or a large one-time event like a Roth conversion, or the sale of a home that generated unexpected tax liability. What to do? Read the notice carefully, verify the amount by comparing it to your tax return. If the amount is correct, pay it immediately or set up a payment plan through the IRS website. If the amount is wrong, respond in writing within the deadline with your explanation and documentation. What not to do? Do not put it in a drawer. Do not assume it will go away. Do not wait for a second notice. Every day you wait, penalties and interest compound. The sooner you pay or dispute, the less it costs. Here is something most retirees do not know. The penalty for late payment is 0.5% of the unpaid tax. For each month the balance remains unpaid, up to a maximum of 25%. The failure to file penalty is 5% per month, up to 25%. And interest compounds daily at the federal short-term rate plus 3 percentage points, which is currently about 7% annualized. On a $5,000 balance, that is roughly $30 a month in interest alone, and that is before penalties. If you owe less than $50,000, you can set up a payment plan online at irs.gov/OA in about 10 minutes. The IRS offers 2 types. A short-term plan gives you up to 180 days to pay in full with no setup fee. A long-term installment agreement lets you pay monthly for up to 72 months with a setup fee of $31 if you pay by direct debit. The interest and penalties continue while you are on the plan, but the IRS will not levy your accounts while an installment agreement is in place and you are making payments on time. Letter number 2, CP501, First Reminder of Balance Due. If you do not pay or respond to the CP14, the IRS sends a CP501. This is a reminder. It lists the same balance plus additional penalties and interest that have accumulated since the first notice. The tone is slightly more urgent, but it is still a reminder. Many retirees receive the CP501 and think it is a duplicate of the CP14. It is not. It is the second step in the IRS collection escalation sequence. Each step is more serious than the last. CP14 is the bill. CP501 is the first reminder. CP503 is the second reminder. CP54 is the final notice before levy authority. And LT11 is the final notice of intent to seize your assets. What to do? The same as CP14. Pay or set up a payment plan immediately. If you cannot pay the full amount, the IRS offers installment agreements that let you pay over time. You can apply online for balances under $50,000. Do not wait for CP5403. Letter number 3, CP2000, Notice of Underreported Income. This letter is different from the collection sequence. A CP2000 means the IRS believes you did not report all of your income. Their computers cross-reference the 1099 forms they received from your employers, banks, brokerages, and retirement plan custodians against what you reported on your return. They found a discrepancy. A CP2000 is not an audit. It is a proposed adjustment. The letter shows the income the IRS thinks you missed, the proposed changes to your return, and the additional tax, penalties, and interest you would owe if the adjustment stands. For retirees, the most common CP2000 triggers are forgetting to report a small IRA distribution, not reporting the taxable portion of a rollover correctly, omitting a 1099-K from a payment platform, or not reporting income from a side job. It can also happen when a brokerage reports the full proceeds of a stock sale on Form 1099-B, but you only owe tax on the gain. If you do not report the cost basis correctly, the IRS assumes the entire proceeds are taxable. What to do? You have 30 days from the date on the notice to respond. Compare the income on the notice to your records. If the IRS is right, you can agree and pay. If they are wrong, send a written response with documentation. Common documentation includes rollover confirmation letters, corrected 1099 forms, cost basis records from your brokerage, and proof that a 1099-K included personal non-taxable payments. Do not ignore a CP2000. If you do not respond within 30 days, the IRS assumes you agree and the proposed tax becomes a formal assessment. Let me give you a real example of how a CP2000 hits retirees. You sold some stock in your brokerage account for $25,000. Your cost basis was $20,000. Your actual capital gain is $5,000. At 15% long-term capital gains rate, you owe $750. But you forgot to enter the cost basis on your return. You reported the sale, but left the basis blank. The IRS sees $25,000 in proceeds with zero basis. They calculate your gain as $25,000 and send you a CP2000, proposing $3,750 in additional tax, plus penalties and interest. The letter looks like a disaster. But all you need to do is respond with your brokerage statement showing the cost basis, and the proposed adjustment gets corrected to $750. This happens more than you think. Brokerage firms are required to report cost basis on covered securities, but some older holdings, especially stock purchased before 2012, may not have cost basis reported to the IRS. In those cases, the IRS defaults to zero basis and assumes the entire proceeds are taxable. Keep your purchase records. They are your defense. Letter number 4, CP504, final notice before levy on state refund. This is where the IRS moves from reminders to enforcement authority. A CP504 tells you that if you do not pay or make arrangements, the IRS will seize your state income tax refund. It also signals that the IRS may file a notice of federal tax lien, which is a public record that can affect your credit, your ability to sell or refinance your home, and your standing with lenders. The CP504 is not the final notice, but it is the notice that transforms your situation from an unpaid bill to an active enforcement case. After this point, the IRS has legal authority to begin taking your money. Many retirees who receive a CP504 panic and call the IRS in a rush to explain their situation. Before you call, gather your records. Know the tax year involved. Know the amount. Know whether the amount is correct. If you call without this information, you will not be able to resolve anything on that call, and you will have wasted time during a critical window. What to do? Pay the balance immediately if you can. If you cannot pay in full, apply for an installment agreement. If the amount is wrong, file a dispute in writing with documentation before the deadline. If you have a legitimate financial hardship, you may qualify for currently not collectible status, which pauses collection activity. A tax professional can help you determine the best option. Letter number 5, LT11 or Letter 1058, final notice of intent to levy. This is the letter that emptied the retired postal worker's bank account. And LT11 is the IRS telling you they're going to seize your assets, bank accounts, wages if you are still working. And yes, Social Security benefits. The IRS can take up to 15% of your monthly Social Security check to satisfy a tax debt. The LT11 gives you 30 days to request a collection due process hearing. That hearing is your last opportunity to stop the levy, negotiate a payment plan, submit an offer in compromise, or argue that the levy would create an undue hardship. If you miss the 30-day deadline, the IRS can proceed with the levy without your input. They do not need a court order. They send a notice to your bank, and your bank is legally required to freeze the funds within 21 days and then send the money to the IRS. What to do? Do not try to handle an LT11 yourself. Contact a tax attorney or enrolled agent with experience in IRS collections immediately. Request a collection due process hearing in writing before the 30-day deadline. This stops the levy while the hearing is pending. Bring every piece of documentation you have about the tax debt, your income, your expenses, and your financial situation. Since 2019, the Taxpayer First Act requires the IRS to obtain a court order before seizing funds in structuring cases where there is no connection to illegal activity. But for unpaid tax debts, the levy authority on an LT11 does not require a court order. The notice itself is the legal authorization. Let me be clear about what a levy on Social Security looks like. If you receive $2,000 a month in Social Security and the IRS levies 15%, that is $300 taken from your check every single month until the debt is paid. On a $10,000 tax debt, that is over 33 months of reduced Social Security. For a retiree on a fixed income, losing $300 a month can mean choosing between medication and groceries. The IRS also has the authority to levy bank accounts. When they send the levy notice to your bank, the bank freezes your account for 21 days. During those 21 days, you cannot access any of the money in the account. After 21 days, the bank sends the frozen funds to the IRS. If you had $12,000 in your checking account and the IRS says you owe $12,000, your balance goes to zero. Your rent bounces. Your utilities get shut off. Your life stops. This is not theoretical. This happens to real people every day. And in almost every case, the problem started with a letter they did not open. Let me be very clear about the sequence because understanding it can save you thousands. CP14 is the bill. Deadline 21 days. CP501 is reminder 1. CP503 is reminder 2. CP504 is the final warning. The IRS can now take your state refund and file a lien. LT11 is the final notice. The IRS can now levy your bank account and garnish your Social Security. At every single stage, you have options: payment plans, dispute rights, hardship status, settlement offers. But those options disappear one by one as you move through this sequence. By the time you reach LT11, your options are the most limited and the most expensive. Here is your action checklist. 4 things to do today. 1. Open every piece of mail from the IRS immediately. Do not put it in a drawer. Do not assume it is a scam. Real IRS letters come by regular mail with a return address in the letter. They will have a notice number at the top right corner. 2. Read the deadline on every notice. Write it on your calendar. Respond before it passes. 3. If you do not understand the notice, call the number printed on the letter. That number connects you to the IRS department handling your case. You can also call the main IRS number at 800-829-1040, but the number on the letter is faster. Before I give you number 4, let me warn you about something. The number one reason retirees ignore real IRS letters is that they are afraid of scams, and that fear is justified. IRS impersonation scams are on the dirty dozen list every year. Scammers call, email, and text pretending to be the IRS. But here is how you tell the difference. The real IRS will never call you demanding immediate payment by gift card, wire transfer, or cryptocurrency. The real IRS will never threaten to arrest you on the phone. The real IRS will never email you asking for personal information. The real IRS sends letters through the United States Postal Service with a notice number printed in the upper right corner of the first page. If you receive a letter and you're not sure it is real, do not call the number on the letter. Instead, go to irs.gov/notices and look up the notice number. If it matches a real IRS notice type, it is legitimate. You can also call the IRS directly at 800-829-1040 to verify. Do not let fear of scams cause you to ignore a real notice. That is exactly how the retired postal worker in Ohio lost everything in her checking account. She thought the letter was fake. It was not. 4. If you receive a CP504 or LT11, do not try to handle it alone. Get professional help. A tax attorney or enrolled agent can stop a levy, negotiate a payment plan, and protect your assets in ways you cannot do yourself. 5. Check your IRS account online. Go to irs.gov and create an individual online account if you have not already. This lets you see your account balance, view notices the IRS has sent you, check your payment history, and download transcripts. If you missed a letter because it went to an old address, your online account will show the notice and the deadline. This is the single best tool the IRS offers retirees, and almost nobody uses it. And one more thing. If you have moved since you last filed a tax return, file Form 8822 to update your address with the IRS. This is free, takes 5 minutes, and ensures that every future notice goes to the right place. The IRS does not need to prove you received a letter. They only need to prove they sent it to the last address on file. If that address is wrong because you moved and did not update it, you will miss every notice and lose every deadline without ever knowing the letters existed. The IRS sends millions of notices every year. Most are routine, but the ones that are not routine can take everything in your bank account in a single day. This is Kevin Retires. If this video helped you, hit the like button right now. If you're not subscribed yet, hit subscribe and turn on the bell. If you know a retiree who has been throwing away IRS letters, Send them this video today. Drop a comment. Have you ever received an IRS letter you did not understand? I read every single one, and the most common situations become future videos. I will see you in the next one.